Good evening, my fellow traders, and welcome to your weekly market recap here with Riz International. Of course, I want to send a special thank you to all of our elite members who are here live, to all of you who are catching the replay or are watching this on YouTube. Thank you for joining us here on Riz International. Would highly recommend you go ahead and click that like and subscribe button. Would really appreciate it. And if you want to get notified every time we upload new content, make sure you click that little notification bell so that you get an alert every time we upload a new video. Now let's take a look here at the S&P 500. Now we've been talking about some critical support levels on the S&P 500 for quite some time. Of course, our elite members are well aware of this because Riz gives us, daily updates as what is going on in the market. But let me zoom in here because it's funny because if you've taken Riz's masterclass, and if you haven't, I highly recommend that you do. He talks about, putting things on charts, and then, the lines don't have to be perfect and things like that. We've noticed here that I've put my lines perfectly on, 4,500, 4,450, things like that. These are critical areas of support in the S&P 500 that we've noticed. This 4,300 area in particular, incredibly strong right now. There is a lot of buying pressure down here. And we saw that with multiple attempts for the market to sell off last week were just simply bought up and kept the market afloat. Then, of course, last Friday, huge push right up to the 200 simple moving average, and we were waiting. We were waiting to see what was going to happen. And, well, we figured it out pretty quick. Huge rally on Monday through Wednesday, honestly. Didn't even have any type of a pullback until Thursday. It was just up, up, up. I know a lot of our elite members were able to capitalize on that dip buy list that Riz put out. If you did and you were able to get in this area, you're sitting pretty happy right now. We'll just put it that way for the most part. And then it was kind of interesting. So, we ran up pretty close to this 4,600 level on Wednesday. It looks like we made it up to, I moved the mouse, hang on. 95, so like 5 points away from that 4,600 level, right there on the 90 moving average, essentially. Had a bit of a rejection on that on Thursday, nice red candle, and then Friday is what I find to be the most interesting day of them all. Let me zoom in here a little bit closer so you can see this because the numbers are so close. We had quite a lot of selling pressure early on, and then there was a huge reversal, push up higher, and then it was sold off again, and we finished the day literally 54 cents away from Riz's support level on the S&P 500. A very interesting day if you were watching the markets on Friday. A lot of whipsaw, a lot of movement and volatility, and it was very difficult to get a handle on, to say the least. But, of course, if you're in elite, you guys are getting our updates when we get in, when we get out of all of our positions, so that you can take your own positions how you see fit. But very interesting, how we just are sitting right on support right now. I mean, we are sitting about as close as you can possibly get. I always like to say you want to see it close above support. Well, we did by 50 cents, 54 cents to be specific. And so very interesting day. Like I said, a ton of volatility this entire week. And hopefully you were able to capitalize on this move up from Friday. Very, very nice push on the S&P 500. We'll have to see what happens here coming in, next week. But obviously earnings season is here, and I think a lot will hinge on that, on some critical earning results that, of course, if you're an elite, we're going to keep you aware of so that you know what's going on and how the market is behaving. Let's go ahead and take a look here real quick at the breakdown for the S&P 500 on the year to date. Obviously still in the red, down 6% on the S&P 500 in general, below the zero line. Financials did manage to claw back up into the positives. Of course, energy is going nuts right now, and we'll take a look at that here in a minute. But everything else right now is under the red line, or under the zero line, I should say. Utilities, healthcare, real estate, tech, all in the red right now. Only real estate and tech are underperforming the market. Everything else is overperforming. But still, the only thing positive right now is energy. Let's go ahead and pull this back out for a year and just kind of take a look at where we are as a whole over the last year. S&P 500 up 14%. Over the last 200-odd trading days. And you can kind of see where things are at right now. Real estate been taking a big hit lately. Energy is going nuts. Of course, we know why, and I'll make sure you know why here in a minute. Tech has been pulling back a bit. I think we've seen that quite a bit lately with earnings results and the volatility in tech. Of course, Riz talked about on our last webinar on how growth stocks have been getting hit pretty hard, and we're seeing that definitely in the tech sector for sure. Speaking of that energy thing, oil, I asked Riz last week, if you caught last week's webinar, I asked him, hey, do you think it's possible for us to have $100 a barrel oil again? He said yes, with pretty much absolute certainty. And he's looking like he's right. We're pushing up pretty hard on oil here. We closed at 92.31 per barrel. I didn't think that we were going to see this again, but yeah, it's like 07, 08 all over again. Yeah, oil going absolutely nuts right now. Huge, bullish trend here on oil. We don't currently have a position in oil in Elite, and not recommending that you guys take one either, but it's definitely something to keep an eye on because the price of oil is definitely pushing up the energy sector, to say the least. Gold not doing anything. I feel kind of like a broken record talking about this, and it almost makes me question whether we should keep this chart on here or not. It's been trading sideways for the better part of a year. Even if we zoom out here to 2021, we've been in this channel and we have not gotten out of it. And I mean, especially here over the last, since about July, we haven't really deviated much between 1765 and about 1850. So gold is not doing anything. Despite inflation going up, gold is not behaving as it used to, which was a hedge against inflation. Now it's just kind of doing its own thing and just kind of trading sideways for the most part. Something that's not trading sideways, as I always like to say, is Bitcoin. Bitcoin been in a huge downtrend here since the November the 10th of last year. When we hit the new all-time high on Bitcoin, which was 69,000, I'm sure that no one did that on purpose, but it's definitely a nice number. Yes, I'm that mature. Yeah, huge downtrend on Bitcoin here, but we apparently have broken out. Huge breakout day here on the 4th, which was, of course, Friday. Really big push in Bitcoin. Not much happening on the Bitcoin trading day on Saturday, and of course the next trading day is currently going for Bitcoin right now, of course, as Bitcoin and all crypto is traded 24/7. Very nice breakout here, break through this resistance level, and this is kind of what can happen. You'll notice there wasn't a whole lot of volume as far as Bitcoin is concerned. Seems mostly like a technical breakout to me, but a really nice bullish push on Bitcoin, and now trading sideways over the weekend, but I guess everybody needs a break now and then from trading. Had a couple questions come in on some tickers that people wanted me to take a look at. Now, I know usually what I do right now is I give you stuff that Riz is looking at for the week. Sadly, I talked with him, and he said there really isn't anything on his radar right now, and I think that's because there is so much indecision in the market. If this candle on Friday tells me anything, it's that the market and investors and people who are putting money in are not sure which direction they want to go. There's a lot of buying and selling going on. There's a lot of fighting between, the two camps, and we'll have to kind of see who comes out on top. But, really a lot of indecision in the market, and this is not the time when you want to be buying in. The time you want to be buying in is down here, and that's exactly what we did. People who chase often get killed. So, you got your people who are chasing the market. Oh, it's never going to go back down here, buying at 4,800, and, well, we haven't even gotten anywhere close to that since then. So, it's one of those things where sometimes less is more. And I understand as traders that's sometimes hard to digest, because we want to be in there, we want to be trading, we want to get in and out of positions, we want to be booking profits and, averaging down and all that cool stuff that we talk about. And people who have multiple monitors with 50 charts posted up on them all like to say how they're doing it, and they post their P&Ls, which are obviously photoshopped on Instagram and things like that, but I digress. In any case, guys, this is it's really telling is what I'm trying to say, that just because we're not putting in new trades does not mean that we are not in the market. It does not mean that we are not keeping an eye on things and ready to go when the opportunity arises. With a day like Friday, there's a reason why we didn't put any new trades or any alerts, because it doesn't make sense. If we had a clear direction on the market, you'd be like, oh, well, Chris, it's going up. Okay, for the first half of the week, but the second half of the week, it looks like it's going down to me. So it's one of those things where we need to see where it's going to go, and then we will take positions accordingly. So what I'm saying is just be patient, and let me go to these questions that I got from our elite members. Let me pull up my PMs, and I want to thank everybody who PM'd me a question. I really appreciate it. And for everybody here on the live call, go ahead and start typing in your questions in the chat, and we will get to it. But the first one that I got from PM is ASAN. Now, this is one that Riz was in a little while ago, and I need to check Riz's open positions, but I feel like Riz got out of it. I'm pretty sure he booked profits on this one. Let me see here. Yeah, I'm not seeing it currently in the open positions tab, so yeah, we are not in this one currently. But thank you for writing in and asking about it. Let's take a look at it. Now, obviously, huge meteoric rise here on ASAN from, you know, the May of 21, somewhere around 27, going up all the way to over 140. So let's take a look and see what that percentage growth is there. Let's go to the top. When I was at the top, a mere 455% in a year. Seems legit to me. So a bit of a pullback here on ASAN. Now, I'll say we're sitting right here on historical support. I mean, this is a beautiful little, you know, support level here. I mean, look at that bounce off of there. So, you know, for the person who sent this in to me personally, am I going to be buying down here? No. And the reason being is I want to see more of a push than this before I'm thinking of getting in. For me personally, this is a pretty strong downtrend, and until we break, a la Bitcoin, I'm not suggesting you get in Bitcoin, but a breakout kind of like this. You know, I want to see that push through and have some euphoria in it. You know, I want to see, you know, people jumping in on it and going for it. And so right now I don't see that on ASAN. I see it really just kind of sitting here around this 44 level, which seems to be pretty strong. I mean, obviously it was resistance before, but now it's support. If it can hold here and it continues to consolidate, so long as it stays over this, I feel it's pretty strong. But the minute we close below this and, you know, continue to push lower, I don't really like it. So I want to see more of a curl before I'm jumping in on this one. I think it's definitely one of those growth stocks that got wrecked, for lack of a better term. And obviously earnings didn't help, even though earnings were in the green on, you know, both, you know, EPS and revenue were both positive. Still got slaughtered here post earnings, and it's still reaping the benefits of those good earnings. So, you know, obviously we beat EPS, we beat revenue, clearly needs to be sold off. Makes complete sense to me. But of course it doesn't, guys. I'm being sarcastic. But yeah, for me, this is not a buy just yet. This is a wait and see. Is my opinion on this one. Now I have two others from a couple of our members who sent me some to take a look at. All right, Hal and Bill. These are fantastic names. Okay, yeah, Halliburton, absolutely. Wow, okay. Hal has been going a little bit crazy. I would not take this. This is a straight up chase. Let's just be clear on that. Now, obviously, it's been a hot minute for Hal. Hal used to be considerably higher than it is now. But let's see here. We've got some historic levels here. Let's throw these in. Now, I'll say these are pretty far in the past. Typically, you don't want to go back more than a year, but we do that. There does seem to be some credence to that level. So yeah, that 32, 30, 40, 50-ish level seems to be kind of important. So for Hal, I mean, beautiful run-up. If you were able to capitalize on this, congratulations. Looks like earnings were good, but right now we're overbought on this and running into support/resistance that we weren't able to push through on Friday. So I would be really careful with this one if you're going to get it here, because we're so far extended. I mean, look how far away we are from the moving averages here. That's a lot of space between here and the nearest one that I watched was at 25. So that's a good $6+ away. I mean, if you want to take a speculative position on it, you can, but this is a straight up chase right now. Now, does that mean that it won't continue to run? No, it does not. It can absolutely continue to run. It can do one of these things And you'll be like, but Chris, you told me not to get in. I'm being cautious, guys, because I understand, listen, this is your money, and if it were my money, am I going to take this here? No, I'm not. This is straight up a chase, and I would not take it at this position. The other one is Bill. Does that mean that you can't take it there? You absolutely can. But it's a bit more of a chase. Now, this is an interesting one. Bill.com. I'm not familiar with Bill.com. I'll have to go check it out later. Very strong bullish push here over the 200 simple moving average. Obviously, a bit of a downtrend here as of late, but this one seems to be breaking out. Obviously, on earnings here, okay, so earnings were good. This company sucks. They're not making any money at all. But actually, they did this time. They're break even, fantastic, and they had revenue even better. They made extra revenue from what they said they were going to make. So clearly, look at that volume candle there. Holy cow! So let's see, the average is about 2.8, so about 3 times. Yeah, about 3x volume on the day. That's impressive. So clearly post earnings here, people loved it. It's not a terrible entry if you like this one. Again, it's a higher dollar stock. You're going to have more intraday volatility. I would take a look at it on Monday. And you can kind of see if it kind of comes back down here and it kind of holds over the 200 moving average and then it starts to push back up. I could definitely see taking that, but very nice breakout here post earnings. And yeah, congratulations to Bill.com. Looks like they were doing good. All right, Panos wants to know, do I think it's too late for an entry on Spotify? Well, I think you could always threaten to pull your music off there and, you could be famous for that. All right, let's take a look here. So let's take a look at earnings. Okay, so earnings were, pretty nice. The 34-cent surprise. They are obviously still not making money, but a decent extra revenue coming in. Obviously, there's a lot of controversy around Spotify right now. With people trying to get Joe Rogan canceled and things of that nature. I think it would be absolutely detrimental if they did that. I think it would be the stupidest thing that Spotify has ever done, caving to public pressure, I guess I would say, and blatant censorship. Let's call a spade a shovel here. As far as an entry on here, I think you're going to be, obviously it looks like it's bouncing, okay, but it's not a terrible entry. I'll put it that way. Earnings were good, things like that. In my opinion, if this whole thing with Rogan blows over and they don't have to buy out his contract, which is $100 million, by the way, I think you'll be just fine. I think it'll start clawing back up there. It's a risky play because you're going to be so dependent on these news stories. So these catalysts that come out, these new, things surrounding that will definitely play a part in how investors view the stock. Now, obviously, we're on a straight downtrend right now. And so that to me is concerning. But that being said, if you wait till it's completely out of this downtrend, you're going to miss out on a lot of profit. So I would say, me personally, if I were like, okay, I believe in this, I think it's going to be going back up, I'm taking a smaller position on this one until it starts pushing a little bit more. Long term, obviously, well, not long term, since about the beginning of the year, or last year, actually. Let me just draw this here. I mean, pretty much a straight downtrend since, the early part of last year on Spotify. So the safe entry, honestly, is a push over this line. But if you want to try and trade it, if it makes a rally back up here and use that kind of as a guide, as a place to potentially take profit, that's something you could do. Just be aware of your levels that are coming up here. Obviously around 220 is going to be something probably going on there, if I had to guess. That'll be an area you'll need to keep an eye on. And this level here right around 200 is something to keep an eye on as well. That being said, you've got a good $25 per share between here and there, so definitely room for profit to be made if it continues to rally. If it doesn't, hold off. That's my opinion on Spotify. But I think a lot of this is going to... There's a lot in the news about Spotify right now, and so that's something you'll need to keep an eye on. All right, Matthew wants me to take a look at you. Unity Software. Okay. This one, obviously, we've looked at this one before because I have drawings on it. So, obviously, a really strong push down here, kind of with these growth stocks getting hammered right now. Again, I don't know this one specifically, though it looks like earnings were good. Yeah, okay, so they had a, 32-ish% beat on earnings. That's pretty solid. Revenue's up nicely. Can't beat that. It's a risky entry down here. Obviously, we're below the 200. The 50 and the 90 are starting to crash down. It's a gaming engine. Okay, gotcha. So, yeah, that obviously is... When they pick up contracts and things like that will obviously be a good thing. Clearly, an IPO as the 200 is only a few months old. So, yeah, I would like to see it continue on Monday. You could consider taking a position at that point. Just keep an eye around here, around the 200 simple moving average is my opinion. Yeah, I remember. I think Riz and I both looked at this when we were talking about it before. But, earnings were solid. If the push on that continues towards the upside, then yeah, you've definitely got some room to go. I would just again, just keep an eye out when it starts approaching these moving averages. You will see a lot more buying and selling going on. It depends on which end of the, the buying and selling you're at. It will depend on which way the stock decides to go, or the security, I should say. And so I agree it's kind of like a wait and see, but also it's one of those things. We did get a nice push off earnings. I would say if it continues to run on Monday, you could consider a position. Again, I would go half size at most because of where we're at, because of this downtrend, and we're underneath all of this resistance that we're going to have to get through. It's going to have a bit of a fight to get there. 130 looks like, about 129 is going to be another level right about there. I'm going to mark that. Yay, about there, perfect. Obviously, we've bounced off there before. It's just got a lot of stuff to get through. That's my only concern. As all of these things pushing towards the the downside, the 200 is going to start curling over here fairly soon. You can see it flattening out from this. From actually it would be back here. From these run-ups here, it's starting to kind of flat out, and it'll start to push down as well. And so it's just something to be aware of, basically. But can you take a position? You definitely can, if that's if you like it, if you've done your due diligence on this one and you feel like it's a good position, then I would say go for it. Again, just be cautious, especially with the way that the market's been behaving lately, how finicky we've been, how fickle, I should say, that the market has been lately. With how much it's going up and down, and the intraday volatility that we're getting can definitely shake you out of can definitely shake you out of a position like this on one of these more speculative plays. So just be careful, keep an eye on it. It's not one of those things where, if you're getting into something like a Walmart or something like that, where like, oh yeah, red day, whatever, I'm going to hold on to it. This, Unity Software, obviously a lot more speculative than a blue chip company like Walmart. Does that mean you can't be profitable with it? Absolutely not. Could absolutely be a perfect entry here if this momentum upwards continues, if you continue to ride this high off earnings. The question is, how are people who are getting into it going to take it? I mean, obviously they took it positively, but will that continue to push up on Monday? We won't know until Monday, but it's not a bad entry. I'll say that. Obviously, you have a nice positive catalyst with earnings, and that can definitely push you up higher. So could be a really good entry. Just be careful with it and be able to average down if it's a position that you feel like you can hold long term. Hey, not a problem. Glad to help. Anybody else want to talk about anything? Any tickers on your mind? Anything going on in the market? Want to make sure that we get everybody. CRM, yes, Salesforce. Good old Salesforce. Also getting hammered pretty hard here. It looks like earnings is coming up on the 1st of March, so we've got about a month. Of course, it is a short month. 50 is crashing down below the 200 here. Oh boy. Let's just zoom it out and take a look at the 25,000 foot view, as they say. So, I mean, clearly, nice solid uptrend long term, since about 2017. We peaked here in around 21, probably because we were just clearing up the pandemic type stuff then. And everybody was working from home, and so that Salesforce stuff lets you do that sort of thing. A bit of a rollover since then. I would say it is looking to be trending slightly up right now, but there's a lot of dead space in here. And by dead space, it means basically space between your support and resistance areas. Now, there's some minor areas here. Like this one seems fairly important. Yeah, about there. Close enough. Yes, I mean, that 235 area is going to be kind of important, but this one can go either way. Back in my days, when I was doing the dirty word here, which of course would be day trading, when I was doing that sort of thing, I would say that, it's basically in space right now. It's not near or around any critical support level, I would say, and it's just kind of hanging there, and it could literally go either direction. So earnings, of course, will play a part in this. I don't think you're going to have to worry about, or at least this is my opinion, there will not be a whole lot of extra news around the virus, in my opinion, because I think for the most part people are over it. I think that Omicron was the last hurrah, and I think it's going to become endemic at this point. That's my scientific opinion for someone who hasn't been in science since 2017, but you can take the scientist out of the lab, but you don't take the lab out of the scientist. So, in my opinion, I think Salesforce is the biggest CRM out there. Obviously, they're solid. They're going to be doing good things, and they're constantly adding stuff to their platforms, which is always good. Offering clients new, features. Earnings-wise, they've been crushing it, as of late. I mean, wow, huge beat there. And I mean, it's just all green all the time, it looks like here for CRM as far as earnings are concerned. So, I mean, they're definitely making some nice bank. I mean, $1.27 per share on EPS in the positive, $6 billion in revenue. It's nothing to shake a stick at. So, I mean, as far as that's concerned, as far as the fundamentals are concerned, I mean, solid company, in my opinion. I think they're going to be doing just fine, and they're going to continue to expand and, do new things. We actually have the Salesforce building here in Indianapolis. And so, a great company, definitely something you could consider going ahead and buying the dip on, especially if you don't mind holding it long term. I think that is, with a play like this, is definitely where you kind of need to be at. Because we may not get this instantaneous run back to 313 like we'd like. I mean, obviously, like, you're looking at this and it's juicy, right? You're like, oh my gosh, I've got almost $100 per share in potential profit. Yeah, it could also go down another $50 per share too before it decides to base out and you've actually found the bottom. Which is why, again, when you're buying something that's just kind of hanging there in space, especially with earnings coming up in about a month, maybe go in a little less on something like this. I will say it's not as, if you look at the intraday volatility on it, it's not as bad as some other high dollar stocks. Now, I say it gaps, obviously, here and there, which they all do with news and things like that. We've kind of gapped down here on this one. Obviously, this earnings was not received as well. I guess they didn't do as good as they had hoped. That paltry 61 million excess of revenue was just not enough. I was expecting 200 million. So, it's one of those things where if you get in now, it could be a fantastic entry, and then you could add to it later, especially if it starts to run. You can totally average up. I know that you're like, why would I average up? Because if it's running, sometimes it's the right thing to do. If you get that signal, you feel like this is it, it's going to run, there's nothing wrong with buying some more shares so you're in full position and you're ready to go when you finally hit your profit targets, or we start coming in closer to those moving averages, and you just want to be a little careful there. Keep an eye on it, is what I'm trying to say. So definitely not a bad entry, I would say. Definitely discounted from the November 2021 prices by quite a bit. So yeah, could be a pretty solid entry here. I don't hate it, is basically what it's coming down to. I think it's pretty decent. We had a nice little bounce here off of this area, this 209, 210 area, and seems to be holding over it, so it seems pretty decent. Can I look at Walmart? Absolutely. I had it up just a second ago. Walmart bounced off the 136 area, and I was ticked off that I didn't have an alert set so that I knew that it was there. So 136, really critical support area for Walmart at this point that I'm seeing. And we basically ran up to the 50, rejected, and we're coming back down. I wouldn't buy it until it gets a little bit closer to the support area. You can try and, average in if you want. Maybe look at it around 138, something like that. Oh, you got in at 135? Bam. Well done. Well done. Excellent timing. You could not have timed it much more perfect than that. So very well done. Now you're thinking you should average up. I'd want to see it push over. If you really want to average up and you want to hold longer term on this one, I would wait for a push over about 142 for sure. If you want to be for certain that it's actually starting to rally again. This rejection here is a little disconcerting. I feel like it may start to come back down before it starts going back up, so it may like do one of these types of things. I just do like this and then kind of that. That's kind of my guess on Walmart. So, if you want to average up a bit, I think you could. I think you could, especially on Walmart. Solid company. Also, oops, I always forget to change it back. There we go. The dividend's not bad. 55 cents a share is nothing to shake a stick at. I would take it, and I have in the past when I was holding this when dividend came through. So definitely a great company, the #1 brick and mortar store in the United States. Not going anywhere. So I definitely can support your position on averaging up here. You may just want to give it a day or so. See if it kind of comes down here and forms a base. If it does, that's a great place to go ahead and average up and then wait for the push that will come eventually. I can't guarantee that it'll happen at this earnings season, but definitely a great company to be in. And if I had caught it back down here around 136, I totally would have taken it. So definitely I can get behind this position, especially with your entry at 135. Again, very well done. Cherry pick that one. Hey, no problem. And I want to talk about one thing here, and then we'll go ahead and close it since we're coming up on a little over half an hour. And it's this concept of like being afraid to get in a position or things like that, or worrying that you're not getting in at the right spot. Or sometimes I hear the talk about, well, whenever I get in, it always goes down. Right? That's a classic. And I think it's something that we all have to deal with as traders. It's a psychological issue that, and it may be true. Maybe our entry isn't perfect, and I think that's the thing we need to remember, right? Is that we're never truly going to bottom ticket or top ticket, meaning we're never going to get it at the absolute bottom, which here on Walmart would have been, let's see, a couple days ago, 133.95. I mean, will you do it once or twice? Absolutely. It will happen eventually. But I will tell you, it is the exception. It is not the rule. I can only recall a few times when I've been able to cherry pick one and get it right at the bottom, and my position was in the green the entire time. Most of the time, I'm in the red and I'm holding and holding. A great example is Activision. I was in this one on this dump here. You can see where my average cost was. I was right at 68 was when I got in on this one. And I was so ticked off. Like, we kind of came up here to this in January, and then it dumped again. And then, of course, the news came out for the acquisition by Microsoft. Like, oh, Chris, you were just lucky. But I was holding a solid company that has, good products, no matter what you think about it. They're one of the top video game producers out there. And, I was rewarded for holding that. And, I mean, I was down, like, quite a bit, obviously, quite a bit down here, and finally started to get that push, and then it just came back down again. I'm like, oh, here we go again. We're going to go all the way back down to 57. But then it came back up. I mean, I held this one. I think I was in on this dump here. It might have even been, yeah, it was probably on this dip right here. It was going through on earnings day. Because I think that's when Riz put the alert out, and it just kept selling and selling and selling. And I'm like, okay, what are we going to do? We're going to hold. And that's really kind of the lesson here, guys, is sometimes your timing's not going to be perfect. And that's kind of, especially with the market behaving the way it is right now, you kind of have to understand that maybe you may have to hold it a little bit longer, especially if you're holding a solid company like a Walmart, like Microsoft, Salesforce. It's one of those things where it's like, okay, yeah, I may have to suffer a little bit. I may have to hold through some pain. Always remember, guys, you have not lost anything unless you sell. All right, that is the biggest thing that I want to hammer in on you, because it's like I get it, all right? We like to bitch and moan about how bad our portfolio is doing. It's like, oh my gosh, I'm down 20% since the year started. Oh my gosh, this one position's down 15%. It's like, but have you sold? No, I'm still holding. Okay, then you haven't lost anything. I get it. When you open up your trading app or your desktop, what's the word platform, you see it and all you see is negative, and it wears on you. But understand that if you're in solid companies with solid entries, yes, you may get in here on Activision at 68 and have to hold it for like 3 months before Microsoft got their shit together and went ahead and bought the damn thing. But you know what? You held on, you made it through, and you made a hell of a profit doing it. And I feel like as traders, we're so quick to forget the wins that we've had, and all we forget are the losses. It was in the movie Rounders, when in the introduction that Matt Damon was talking about, it's about poker, guys. And he says, and I'm going to paraphrase because I'm not going to quote the whole line, but if you haven't seen it, go watch it. It's a great movie, by the way. But he said that, most poker players can't tell you what it was like for their big wins. It's something that they don't really talk about, but they can tell you in detail all of the different things that happened with some of their biggest losses. And I feel like as traders, we do that as well. We really try, and we just kind of don't focus on our wins as much as we should. And all we do is we sit and we look at it, and because the things that are in the red, we have to hold longer, right? And so we're looking at it all the time. I'm in a couple positions right now. It's like they're red. I got in on Facebook. Here, I'll take a look. So yeah, I got in here about 241.50 is my entry. I'm in the red on Facebook right now. It sucks. I get it. Yeah, PayPal. PayPal is a fantastic example. I know a lot of us has been holding PayPal for quite some time. Not to be a jerk, but I didn't get in on this one, and I'm pretty happy that I didn't. But yeah, PayPal been getting absolutely slaughtered for. And this is insane. This type of rundown on PayPal. It's ridiculous. It should not have, done that so bad. But yeah, I know you wish you weren't in it either. But the thing, and again, you haven't sold it yet. They're making billions of dollars, per year. They're in the green. It's, yes, we missed by a penny. Oh my gosh, what a tragedy. This is an overreaction. I'll tell you right now, this is a straight up overreaction. How long is it going to take to come back? I don't know. But it's one of those things where sometimes, time to DCA. If you have to. But it's one of those things that sometimes it wears on you because you look at it and all you see is the red, but we so often forget all of the positive trades that we've had, all of those huge wins. And so what I want to recommend for all of you today is make sure that you celebrate your wins. And it doesn't have to be something huge. It doesn't have to be like, I'm going to go buy a new Corvette, because I can promise you I have never had a trading win that would ever let me purchase a Corvette. But maybe some, junker from a junkyard maybe once. But celebrate the wins, guys. Try and remember your wins a little bit more, because so often we get discouraged and we see those positions that we're holding that aren't working out like we'd hoped. But then when they do, we're so quick to forget, because you click the sell button and it's gone. The money's in your account and you're like, okay, on to the next one. So celebrate those wins. Do something a little special for yourself, whether it be, going out to get a frozen yogurt or an ice cream or something like that, something small. Treat yourself to something a little bit because you nailed it, right? You had to hold through all this bullshit on PayPal when you were in at 240. But when it gets back up there and you're able to get out of it, that relief that you'll have, that feeling of like, yeah, we got it done. You need to focus on that and celebrate those times, because it's so easy to just get into this negative feedback loop. Like, oh my gosh, my life is terrible. I can never pick it, but everybody else is having, these $10,000 profits while I'm sitting here holding the bag on frickin' PayPal. And if you get stuck in that sort of thing, you're just going to get depressed. I understand, Matthew. I get it. And I totally understand that. And it's frustrating that you're having to go through this. But sometimes it's one of those things where it's like, obviously this has gone on longer than something like this. But you could say the same thing here. If somebody were to have gotten in on PayPal here in February of 20, and they see nothing at 124, and it goes down to 83, I mean, that's what, a 30% drop or something like that. It's one of those things, and if you'd held, you would have been fantastic. So yeah, I understand. Sometimes we drop the stop loss, and that's a good point. Everybody is a genius in hindsight, and I'm not saying that you could have predicted this, but what I'm saying is, if you were in this position and you had this 30% drop, how would you feel? It's one of those things where if you're only focused on that part of the chart right there, you're going to feel pretty crappy when all it does is go down the whole time. So I'm not trying to minimize what you're feeling right now, but it's one of those things where sometimes you have to hold through the pain. You have to hold through the hard times. The drops from 240 down to where are we at now, 126, which is basically a 50% drop, and we got to fight through it. I remember first position I took was on AMD, and by God, if I'd have held onto that thing right now, I'd be doing a lot better than I am. But is like I had to hold through quite a bit. Had one of the hugest drops post earnings that I've ever seen. Let's look at it, and then we'll call it a night. You can see that I've played AMD before. Let's see, I think it was in here. Can't remember if it was this one. It might have been. That would be about right for this one. But yeah, think about AMD at $10 a share, right? Yeah, got in like, I think it got in somewhere in like here, like 13 something. And yeah, we dumped down to 10. It was huge. Now, I mean, you're like, oh, Chris, come on, it's only like a $10 drop. This was a huge dump post earnings from where it had been, and was pretty crazy. Now, of course, yeah, if I'd have held that, it would have been in pretty good shape. But, of course, had to hold through all this junk until it finally got to a place where I could get out. And so, but again, it's you remember those hard times. I remember having to hold and going, oh, crap, what am I going to do? What if it keeps going down? What if it doesn't stop? And you play out all these scenarios in your head. And my recommendation for you is if you start feeling yourself going through that, just kind of check yourself. Give yourself a bit of a break and be like, okay, hang on a second. We've gone through this before. PLTR, yeah, PLTR is just ridiculous. It's like it doesn't seem to matter how many contracts they get. This thing keeps getting sold off, and I don't understand why. Because they're doing fantastic. As far as earnings, especially for a relatively new company on the S&P 500 or the New York Stock Exchange, excuse me. It should not be getting hammered this bad, but yet here we are. And so it's one of those things where again, long term, this could really turn around and be very good for you. It just needs to kind of get through this this period of puking, and until it can kind of start going. But I mean, it's a good company, and it's just, I understand it's completely frustrating. You're like, why the hell hasn't it come back up yet? I don't have a straight answer for you, but it's one of those things that I think that if you have the strength and the constitution to hold through it, you can see through to greener skies, as we'll say. So to that will end our psychology lesson for the day. So focus on the wins. Try not to focus so much on your losses. I understand it's hard when you're looking at it. But Yas has a question related to macroeconomics. Let's take a look here. With the latest jobs report being strong, highlighting that the economy is doing well and strong, does that mean equities will not be as favored as much? Not necessarily. The jobs report is one of those things that kind of, it's definitely a catalyst for the market, especially if you watch it on a smaller time frame. Hey, no problem, Matthew. The jobs report definitely plays a role into the direction of the market the day that it's reported, in my opinion. I don't think that it means that equities will not be favored as much. I think as long as the economy is doing well, then things should continue to improve, in my opinion. How that report is taken by investors is another question entirely. And that would be, it's almost like earnings, in my opinion. It's not necessarily what the number is. It's what people and what investors expected the numbers to be and how they interpret the numbers. So it's like, you have these times where, we could go back to PayPal. Earnings looked fantastic. The thing drops 20%. But you're looking at it, but you're like, but the EPS is in line and revenue's fantastic and they're doing great. What the hell's the problem? It's not necessarily about the numbers. It's about how the people who have the money and can move the market interpret those numbers, and then everybody dogpiles in behind them. And so I don't think that equities are going to fall out of favor. I think that the stock market is doing pretty well, and I don't think it's going anywhere anytime soon, and that is a good thing for all of us. And so, yeah, just to summarize everything up, guys, focus on the wins. I understand it sucks when you have positions in the red, but the more and more I've traded, the more I understand that this is just part of what it takes to be a successful trader. You have to hold through those red times, sometimes longer than you had hoped. But if you do, you're going to come out a better trader on the other side. And so I just wanted to give you that message tonight. I hope that it helped. I know Matthew said he needed to hear that, so I really appreciate that. And if you have any questions or you want to talk or you just need to bitch about your portfolio, please don't hesitate to PM me. For all of our Elite members, if you're not part of Elite, definitely keep an eye on Riz's site if we're going to open membership back up. And we are here for you guys. We want to see you successful in the market, and we're going to do everything in our power to help you do so. So have a wonderful evening, everybody. Really appreciate all of you being here, especially our live crew. And we will catch you in Discord on Monday.